I will talk for the next 20 to 25 minutes about navigating an offshore bank account opening. They apply to all clients around the world, but also especially to US clients. The book Swiss Money Secrets is available for free for anyone who's interested. We cover a variety of topics. We talk about the history of Swiss Financial Center. We talk about tax treaties. We talk about the wealth management industry. I'm also very much looking forward to spending the next 30 minutes with all of you on this beautiful afternoon. I'm coming to you from Zurich, Switzerland. As you've heard before, my name is Jamie Vrijhof-Droese, and I am one of the managing partners of WHVP. We are an independent wealth management company that is specialized in the cross-border business, and our area of expertise is the US market. So even though we're based in Switzerland, most of our clients are based in the US. I will talk for the next 20 to 25 minutes about navigating an offshore bank account opening, and then hopefully we'll have around 5 minutes left for Q&A, or we can collect your questions and ask it in the general Q&A session in the end of today's workshop. So I'll be covering 5 topics that I find interesting to know about in terms of offshore banking. And then afterwards, I will also tell you a little bit more about our company and the specific services that we offer. And if you stick around until the end of the presentation, you will also get the opportunity to receive some information on where you can claim a free digital copy of the book I co-authored called Swiss Money Secrets. So let's start right away. The first point I'd like to talk about today is the value that is being added through cross-border wealth management or offshore banking. I think there's quite a few different things that can be said about cross-border wealth management and why it is in such high demand in current times. I want to focus on 2 points, but before I head into them, a few other things as well that I'm not going to talk about in a lot of details, but of course, cross-border wealth management can increase your level of privacy. You do get access to a variety of different markets, and you have a safe nest egg outside of your home country, giving you peace of mind and helping you sleep better at night. Those are some of the thoughts and considerations that we hear from our clients when they reach out to us. And now 2 points that I want to talk about in a little bit more detail. They apply to all clients around the world, but also especially to US clients. And that is the topic of home bias that can be avoided by working together with an offshore wealth manager. So what we see here on this graph that I brought to you from the Visual Capitalist is that 42% of US investors, 40% of the portfolios of US investors are based in the US dollar and are based in the US stock market. In our experience, it can even be higher than that. And what you can achieve through having an offshore bank account is you can tap into the knowledge and expertise of someone who is based in a different part of the world. Of course, you also have the opportunity to make international investments into funds, for example, or ETFs in the US, but working together with someone who is geographically close to the market that you want to invest in brings a lot of added expertise and also widening your horizon. Of course, the US has had a very good run, the economy and the stock market as well over the past couple of years, but moving part of your money outside of your home country and your home currency can benefit you even during those times, because it just stabilizes your wealth, it decreases the volatility, and you can benefit from the investments in other area. We also have another graph showing here the correlation between the US stock markets and international stock markets. So by working together with someone who's based in Europe, for example, or Asia for that matter, you get access to those kind of markets at a higher level. And if you move 25 to 35% of your money offshore, then you can decrease the correlations of the investments that you have in the portfolios. And we do find that a lot of people are aware of diversification. They do have different investments in different stocks, but they do neglect the thought of having different currencies and different jurisdictions in their wealth as well. We can also see that with the second point that I would like to mention in terms of added value with offshore banking, and that's the value of the US dollar. So with our investors who are mainly based in the US, most of their holdings, most of their net worth is denominated in US dollars. And if you have everything in US dollars, you might not realize how much of the value is being eaten away either by inflation or by other currencies increasing in value against the US dollar. So by moving part of your money into a jurisdiction and to deploy that money in a currency account that is not in US dollar, you can profit a lot from those currency developments. That is something that we saw particularly in the last 12 to 18 months, where the Swiss franc really had a very strong run against the US dollar because people love a safe haven currency during turbulent times. Moving on to the second point that I would like to talk about are the financial jurisdictions. Of course, there are a variety of options out there. Earlier today, we have heard about Singapore, which is also very well known. Today, I would like to talk about Switzerland. I think it's important, if you are thinking about offshore banking, that you consider the different financial jurisdictions that are out there, that you consider your needs and your desires, and that you then think about the benefit those different jurisdictions can give to you. Switzerland is very well known for wealth management, and that there is a variety of reasons why that is the case. I brought to you an overview, which I personally like very much. It's a lot of information, so I will just go through the points of why I personally believe that Switzerland as a financial center is the force currently on the planet when it comes to private wealth management. So first of all, there's a AAA rating. That was already mentioned today, that is very rare for a country to have that. I think it was just renewed this week. So the news came out that for this year, the AAA rating will be renewed. Switzerland also has a very low level of public debt. So the current debt to GDP level is around 40%, whereas in a country like the US, we see that more upwards of the value of 120%. So I think that's something that speaks very much to Switzerland as a stable place. Of course, we are also a very neutral country, so we do pride ourselves in political neutrality, and we do have a very strong economy as well, with one of the highest GDP per capita ratios in the world. The corona crisis that we saw in the past year, and that is still somewhat ongoing, has also shown that Switzerland is extremely crisis resilient and has been awarded one of the leading countries when it comes to handling the crisis that we saw. Switzerland is also very good when it comes to sustainable finance. It has great education system. It has worldwide known universities here, but we also have the dual apprenticeship system where people can start working in financial corporations at the tender age of 15 or 16. We also see that Switzerland is an extremely innovative country, which is very important, especially as we look into developments in the cryptocurrency sector and the blockchain. Switzerland is at the forefront with its crypto valley in Zug on that as well. It's a very competitive country. It also has a lot of multinationals there. And while it is in the heart of Europe, it is still independent from the European Union and has its own currency, namely the Swiss franc. And then, of course, it is just an extremely strong financial hub. Private wealth management goes back to the 18th century here when Swiss bankers started managing the money of royal wealthy families. So I think that the track record really speaks for itself, and it's something that people should take into consideration when they think about who to have to manage their money and where to send their money to. Then another very important point is regulation. I think that's a point that is relevant and important for any kind of investor, but especially when it comes to cross-border investing, and especially if a US relation is at play. I think what's important to consider there is there are a variety of options out there, but it's important that you work together with a partner that really has a good understanding of the US regulations. If you're looking for wealth management, make sure that you work together with a registered investment advisor that is regulated by the Securities and Exchange Commission in the US, because you do want to to have a partner who not only speaks your language and understands your culture, but also has insights into tax considerations that are important to you, and any other wishes and specifications that come from your particular geographical area. So I do highly recommend looking out for the kind of wealth manager who is specialized in your nationality and the kind of service that you are looking for. That is one of the benefits of working together with an independent asset manager, because most of them, especially in Switzerland, are rather small. They have a very tailored approach, and they usually have a niche offering of 1 or 2 specialized areas that they focus in, and that you can rest assured that they really know what they're doing. The 4th point is the documentation. So a lot of people who are thinking about cross-border wealth management are a bit worried about all the documentation and administrative hurdles that are placed in their way in order to get started. I think it's important to have realistic expectations. So there is some paperwork involved. I think we have to admit to that. Having said that, an account can usually be opened up between 3 and 4 weeks if the case is well documented and if there are no specifications to it. So I do think it is definitely worth the investment of time and paperwork, considering that you will have a long-lasting solutions that can be adding value to your life for decades or even generations to come. A bit more specifically, I mean, the documentation, of course, very much depends on what kind of account you're looking to open, if it's an individual retirement account, if it's a personal account, a joint account, trust, or an LLC. So the documentation does vary. What will certainly be needed in the beginning is some KYC information. So that's an abbreviation for Know Your Customer, meaning that there will need to be some documentation on how the money was acquired, where it comes from, and what the purpose of the account is. So it's important that it is documented and explained in a way that an objective third party can understand where the money comes from and how it was acquired. Then, of course, what will also be needed is a documentation, so a notarized passport copy. If you have a company or a trust, some documentation on those setups as well. And then with this information, we will usually start a conversation with the bank, and then we'll figure out together what kind of other documents will be needed as well. But again, the good part of working together with an independent asset manager is that you know you have one person to contact, one person who can help you, guide you through the whole process, and has a lot of understanding, expertise, and experience, and also good relations with all the other local partners that are really taking a lot of stress and hassles away from you, because having a local partner is key in order to set up a structure that works well. I think it can be a bit tricky if you're in another place, especially when it comes to travel restrictions. But if you do have someone that is easily available over email and phone and video meetings, that certainly makes everything a lot easier. And then the last point, I mean, that goes somewhat without saying, is that working with an independent asset manager or an independent wealth manager is a very personal and long-term oriented solution. And it's important that the person you decide to work together with, that you really have a lot of trust and a good feeling with this person. There's plenty of options out there. And if you do feel that someone is just not really the right fit for you, please do not feel bad if you are looking for another solution, or if you're checking in with other service providers as well. I think trust is really essential and key, and you should really take the time to getting to know the other person and making sure that it is a good fit, that you feel comfortable with the solution that you chose, and that you can trust this person and do not have any issues in them helping you invest your money. So those are the 5 things I wanted to get out of the way to provide a little bit of context, some things and considerations that people think about before they start working together with someone offshore. I hope that that was helpful, and now a little bit more information about ourselves and our background. So as I mentioned, I'm representing WHVP today. I have 3 colleagues with me in our team. We have Boris, my partner in life and business, who is also managing clients. We have Julia Fernandez, who has been with our company for over 18 years. She's handling clients as well. And then we also have some legal and compliance support, because this is a very important area, especially in today's world. We really want to make sure that we provide a good and compliant service to our US clients. So we're extremely grateful to have in-house support in that area as well. The kind of services we provide are all in the general direction of wealth management, but we do have different tiers of services that we provide. So first, we have our Pilatus service, permanent portfolio, where we start onboarding clients from $250,000 upwards. This is a standardized portfolio that we put together for you with a moderate approach to risk taking, while you benefit from Swiss wealth management. The custodian bank actually is in Vienna, in Austria. We work together with Bank Vincher for that service. The fees are 1% a year. And then we have the Eiger, the regular asset management account, where we have a free choice of custodian banks, where we put together a tailor-made and individualized portfolio together for you. There we have custodian banks in not only in Switzerland, but also in Liechtenstein and Austria. And then lastly, the fees for that service is 1.5% a year. And then lastly, we have our DOM service, our concierge level, so to say, where we start onboarding clients from $1 million upwards. And the fees are also 1.5% plus a flat fee of $10,000 per year, where we also include concierge services, and we also guarantee a personal visit to a city of your choice every year. Generally speaking, all of our services are put together in a way that you are insulated against a continued decrease of the US dollar, and capitalize on international diversification with a strong focus on Europe and Switzerland. But we also make investments in areas like the Asian Pacific area, Canada, or emerging markets. So pretty much everywhere except for the US, to make sure that you really have a good counterbalance to the investments that you already have in the US. All our investments are, generally speaking, I would say on the capital preservation side. So we really are here for long-term solutions and to help you safeguard your hard-earned savings and inheritances. We are not here for any get-rich-quick schemes. We really build up something that you can profit from for a long time, and hopefully your children as well. Now, as I have promised in the beginning, the book Swiss Money Secrets is available for free for anyone who's interested. We cover a variety of topics. We talk about the history of Swiss Financial Center. We talk about tax treaties. We talk about the wealth management industry in Switzerland, what to look out for when selecting a partner. So if you're interested in receiving a copy, please feel free to send me an email at jv@whvp.ch, and I'll be happy to provide you with your copy later today. Learning more about what we do, and make sure to check out our articles on our website, WHVP.ch. You can find them under the Insight section. We also have a podcast where we talk to a variety of service professionals who have complementary services to our wealth management. And then, of course, if you're interested in receiving our market outlook that goes out every 6 weeks, feel free to sign up by sending us a quick email at info@whvp.ch. And we are very happy to include you in our distribution list there. So that was it from my side. Please let me know if you have any questions. I think we should be doing okay from a timing perspective. But
yes, we are great. We are great. And your report is very exciting. So I can maybe ask you questions from myself. Hello, yeah, a little bit from myself at the beginning, and maybe we will join the other speaker, and at the end we will see what the audience asks. For me, your report is very exciting, because I was working in Austria private banking 15 years. I know Winterbank, I know, you know, your partners. And just for me, your investment strategy is very, I think, for now, very actual for the clients. And tell just briefly, what is for capital preservation investments for the more conservative clients you have? What is the percentage, like, let's say, middle time investments? Because now we have like very low, lower fees situation in COVID time, no fees, but low dividends. And clients don't get, the conservative ones don't get a lot of incomes. So what can you like say as an example? What could
yes,
it be?
I do agree. It is, of course, and it has been a bit of a tricky time for investment. That the past year has been very good with the market, because obviously recovering very quickly. We are currently overweight in a variety of foreign currencies that we believe have upwards potential in the next month to come, because we do believe that with the stock markets, they are a bit detached from economic reality, so we are a bit careful there. As you mentioned, fixed income is very tricky because we do have very low interest rates there as well. So what we are looking for are decently rated companies, usually within within Europe, who give out bonds in emerging market currencies, where we do believe that we have some upwards potential. So there we have a combination of a little bit of emerging markets exposure, and at the same time some potential for currency increase in value in the currency, additionally to the lower interest rates that we get. So that's also something that we do. Then, of course, a lot of our more conservative clients really like precious metals like gold and silver. We have also made some investments in platinum in the past couple of months. And then lastly, we also have a variety of stocks that there's still some stocks that are dividend paying, but that would have to be looked at on a case-by-case basis, what at the moment makes sense and what doesn't make sense.
All right, thank you so much. I'm sure the other questions will be erased. Let us tell you thank you meanwhile.